Welcome back. As promised, let's invite the management of Sonata Software. The company's IT services performance was a tad bit subdued. The dollar revenue saw a decline of 6.6% on a quarter-on-quarter basis. And I think margins, too, were a bit under pressure. We have with us Samir, Dhir, Managing Director and the CEO of Sonata Software, joining us on the show. Thank you very much for joining in. Apologies, margins have gone up on a quarter-on-quarter basis. The top line, though, has corrected by 6.5%. Mr. Dhir, what happened? Was it the macro uncertainty towards the end of the quarter which impacted your revenues? And what can you guide for Q1? And what's the situation like?
Yeah, thank you. I think the results are in line with what we had anticipated when we announced our Q3 results. If you recall, in Q3, the later part of the quarter, we had headwinds in one of our largest tech clients, and we saw partial impact of that come through in Q3, but the full quarter impact came only in Q4. So it was much in line with what we anticipated on the top line side. And on the bottom line side, I think we had anticipated it will regain close to about 2% on our EBITDA line, which is, I think, what the results have come out around 1.9%. We have improved our quarter-on-quarter profitability. Just on the numbers, broadly speaking, I think the market is currently uncertain, as you are aware. We are seeing a sectoral trend. Our banking and healthcare business continues to do well because they are more regulated industries, so they are continuing to do well. The retail industry is under severe pressure given the tariffs discussion that are currently on in the US. So we're seeing pressure points in the retail industry. And the tech industry is doing well for us as well. So it's a little tale of two cities. And that's what the results reflect. Our largest client, Headwinds, were fully picked up in Q4. And I think as we get into Q1, we think the pressure on the largest client will ease off. So we'll probably see flattish to slightly marginal growth up in that client as well. So overall, very much in line with what we had anticipated. The results are not a surprise in that sense for us.
Okay, so if the large client is flat or is likely to grow, plus BFSI, etc., is going to do well, in Q1, the company should grow again?
Yes, we think we'll be back to growth in Q1, quarter on quarter. So we do expect to be back on growth trajectories.
And you've also withdrawn, I believe, your guidance of your aspirational guidance of $1.5 billion of top line by FY27?
We had given that as an aspirational guidance.
Yes.
I think that still very much remains intact. I think what we are doing is, and we have said this before as well, we want to be one of the top quartile growth companies, and that's pretty much remains intact. Given the macroeconomic market conditions right now, it's very hard to predict where the growth will or what growth numbers will hit in the next 1 or 2 years. So we're just staying that we will be a top quartile growth company as we move forward, and that's where our aspiration has been and will be.
Samir, good morning. Thank you for joining in to talk a bit about your international business as well, right? Your margins recovered on a sequential basis, but even after that recovery from 14 to 16, you still remain below that 20% mark. Do you expect to get there in FY26, or would you still be happy if this 16 even becomes an 18 by the end of the year?
Look, our long-term aspiration has been, just to revisit our aspiration, is to be a top quartile growth company with a low 20s EBITDA. We were trailing at around 14%. We've come to about 16 now. We think sometime in the course of the year, we'll be around 18 to 20 mark. So this will be very much a defining year in many sense, FY26, that we will climb back to high teens and maybe even 20 marks. So we feel pretty good about it, but the macroeconomic uncertainties are still very much upon us. If market holds up to the extent we are thinking it will hold up, so I think 18 to 20% by the second half of the year is absolutely in the sight.
Okay, H2 margins 18 to 20% at the EBITDA level. On AI, I think you've said 97% of your workforce is trained in generative AI. You're pursuing some $34 million of an AI pipeline. How much will AI contribute to your top line, say, by the end of FY26 and then 3-5 years down the line?
Yeah, it's an interesting question. I think we're pretty excited about where we are on AI, and I think we believe with agentic AI has really come to life. So a lot of the deals that we are now pursuing definitely have an element of agentic differentiation, and that's really helping us. As you probably know, we announced a very large deal win a couple of weeks back, which is a $73 million deal, and that was really predicated on the whole agentic AI differentiation. So we think as we move forward, the AI differentiation is getting embedded into all our deals, and then that's what will the trend go forward as well. From a long-term perspective, I think we've called out in about 3 years' time by FY28, maybe FY29, about 20% of our revenue should be AI impacted or AI influenced. That's how we think this will go. And I think the deals momentum that we have, the pipeline momentum we have, really gives us a lot of confidence that definitely, that we're in the right track.
What about your recent deal that you won, Samir? It was a $73 million deal with a leading TMT company in the US as well. It's a 5-year deal. Now, how do you expect that to scale up? Do we see meaningful contributions coming in from this year, or do you see that happening over a period of time?
It's a great question. So I think we think the deal we just announced will scale up in the course of the year. The work has already started on the program. We'll probably have marginal uplift in Q1, but significant uplift in Q2, but a full uplift by Q3. Maybe by September, October timeframe, we'll be fully ramped up on the deal. So it is very much in the play for the ramp up in the coming year. And like I said, that deal has an integral part of the differentiation is AI. So the customer has really commissioned Sonata to really drive platform level AI differentiation, because that platform is what they sell to their B2B clients. So it's an integral part of their service offering for their customers.
For the other domestic business, which is, the hardware reselling sort of a business, I believe there has been a change in strategy with Microsoft, where they're prioritizing direct sales to large enterprise clients. Is that true? And if yes, will it not have negative implications for your business?
So we work with multiple OEMs.
Yes.
Microsoft, of course, is a significant part of our strategy. So that business has grown for many years now in mid-teens growth from a gross contribution perspective. As you know, we don't calibrate our revenue there, but we calibrate our gross contribution. So we expect that will be the performance even in this year. As long as the market holds up, we think we'll be around mid-teens, around about that growth in the coming year as well. We're very confident of that. Now, each OEM has different incentive models, different plans for the coming year, and we're calibrating to that. We're not overtly concerned about that. I think as the OEMs calibrate their plans, their incentive model will align to that. Our strategy has changed, not vis-a-vis the OEMs, but our strategy has changed that we have now added 3-4 service offerings in the mix. So, for example, we launched, I think a couple of quarters back, our Security Operations Center, SOC, which is really an integral part of our offering from a local domestic market perspective. And also we've added a layer of AI co-pilot implementation and AI implementation for our customers as we do this reselling work. So that's an additional layer that we have added from our strategy perspective.
One final question, Samir, your cash on the books has increased. Now you've gone past 700 crores. What do you plan on doing with that? Is there an inorganic growth opportunity that is coming up, or do you plan on rewarding your shareholders with a buyback, some dividend? What do you plan on doing with that?
So we just announced a dividend. You might have seen recently. So we just announced the board has recommended the dividend. It, of course, will go to the AGM, but the board has recommended the dividend in the most recent board meeting. I think our strategy is very clear that based on the fact that we are positioning ourselves as a modernization engineering company, we are in the market looking for assets. It's the right asset for Sonata. And if we find the right asset, we'll put the cash to good use. But right now, the valuations are overheated. So the moment market cools off a bit and we find the right property, we'll not be shy to take a decision on M&A as well. Quant acquisition, as you know, was done about 2 years back. That has worked very, very well for us. It's a highly accretive acquisition of Sonata. So we'll take calibrated decisions and pull off another one if we find the right property.
Thank you very much, Mr. Dhir, for joining in. Always great chatting and getting your perspective. We'll get into a break on that note. On the other side, Somal Mehta of Mirae Asset Sharekhan will join in with his top trading bets.